Home values saw the sharpest monthly drop in almost 4 decades in August, with the downturn now spreading beyond the major cities. The monthly decline marks the 4th fall in a row on the CoreLogic index, as the fallout from interest rate hikes continues. The national index fell 1.6% over the month, marking the largest month-on-month decline since 1983. Watch the latest news on Channel 7 or stream for free on 7 Plus. The decline has now spread to every capital city except Darwin, and Sydney is still leading the downward course, falling 2.3% over the month. Brisbane's downturn is also gathering pace, with values falling by 1.8% following a 0.8% drop in July. While regional markets have so far fared better than urban centres, regional home values have started to soften. In August, regional home values fell 1.5%. CoreLogic's research director Tim Lawless said the biggest falls were occurring in commutable areas that boomed during the pandemic. For example, the Sunshine Coast in Queensland saw a 4.5% decline in dwelling values for the month. Dwelling values remained well above pre-COVID levels despite the softening market, with all regions and capitals except Melbourne still seeing home values at 15% or above the levels recorded in March 2020. According to CoreLogic, that implies most homeowners have a significant equity buffer before their home is likely to be worth less than what they paid. What next for home values? Lawless expects the downturn to continue throughout 2022 and potentially extend into next year, depending on interest rate decisions. The Reserve Bank is set to make its next monetary policy decision next week. It's hard to see housing prices stabilizing until interest rates find a ceiling and consumer sentiment starts to improve, Lawless said. Lawless said he expected interest rates to increase again, and there was a good chance housing stock would accumulate through the spring selling season, giving buyers more choice and putting more downward pressure on housing values. As borrowing power is eroded by higher interest rates and rising household expenses due to inflation, it's reasonable to expect a further decline in consumer confidence and lower housing demand. There's some silver lining though: lower housing prices could mean housing is more affordable. But CoreLogic points out that mortgage costs and rents are rising, and household budgets are stretched. The wash-up is that lower housing prices and higher incomes should make home ownership more achievable for non-homeowners, Lawless said. But headwinds remain in being able to save for a deposit and demonstrate the ability to service a loan amid such a high cost of living. With digital staff,